Hello, everybody. Welcome to the Daily Dose. Today is Wednesday, February 1st. I'm actually recording this episode about 2 minutes before the close of the stock markets. It's about 3:58 Eastern Time in the United States, 2:58 Central Time where I am at. But we heard from Jerome Powell today. We got the 25 basis point rate increase. And we actually did hear from Jerome Powell that this is the first time that he was willing to say that disinflation has begun. So from the Fed standpoint, inflation has begun to go down, but he also made a very clear point that the job is not done and that the Fed will not be satisfied until the job is done and that inflation is back down to 2%. He would not mention if rate cuts or anything like that were in the near future, but he said that they were going to have to remain appropriately tight, appropriately hawkish with the policy because they don't want inflation to come back. They are not going to be satisfied until it gets back down to 2%. But the market did sense the shift in his tone, in the words that he was saying. He was not dovish, but there was an ability for him to be more hawkish like he was in previous meetings, previous press conferences. And I think the market's starting to pick up on the fact that we might be through the worst of the tightening, and that there might be some policy changes later in the year. The S&P 500's up just under 1% right now, and it's about 15 seconds before the close. Right now, the S&P 500's at 41.16. We are above the 4100 level. We actually got all the way up to the top of this zone earlier today, or just about. We got to about 4150. I had this zone mapped out at 4160, basically at the top. So there could be a little bit more selling pressure today, but if this momentum keeps up through the last 2 days of the week, we could break through that for sure. Again, we are now kind of in this bullish trend since we broke out of this consolidation. And I think the next few days will continue to be very interesting. Again, we have really, really big earnings tomorrow. So now I feel like now that the market is kind of moved up after Jerome Powell's spoken, I think that if these earnings from Amazon and Alphabet and Apple are really good tomorrow, that could drive the market higher as well. And obviously we could see a pullback if they are disappointing. Let's talk about Bitcoin, because Bitcoin started moving as well with the stock market. We're back above 23,000. We're just under 23,600. We're at 23,537. Bitcoin's up 1.81% on the day. Still kind of in this range. If we get some good earnings reports tomorrow and the market continues to break higher, I'd expect to see Bitcoin break out of this little consolidation we've been in. I would expect it to move with the market. I don't think there's any reason for Bitcoin to move lower at this point if the market is going higher, especially with the news that the Fed may be a little bit more dovish in the coming months than initially anticipated. I feel like a lot of issues that come into play when it comes to Bitcoin and rate hikes is just liquidity. I think that more money flows into Bitcoin when rates are lower just by the nature of our financial system, and money comes out when interest rates are a little bit higher. So I think that lower interest rates are obviously definitely a good thing for Bitcoin. And if the Fed does start to pivot their policy a little bit, that would be a good sign. It'd be definitely a tailwind for Bitcoin. But right now it's been pretty correlated to the stock market. So if that breaks higher, I'd expect this to break higher as well. But yeah, that's really all we had today. Obviously, we had the 25 basis point rate increase. I did see some people on CNBC saying that they expected this to be the last rate hike. Next month, if he comes out and says that they're pausing rate hikes, that would send the markets a lot higher. There was a really interesting question during the press conference, and he said, I've noticed that a lot of what you're saying is being changed. You're not really blaming the war on Ukraine for inflation. You're saying that disinflation is starting to happen. You're saying all of these things, um, but your policy isn't changing. You're still talking about raising rates, keeping them there, being extremely tight. Why is that? And he said, are you staying like that because you're afraid that the markets are going to go ballistic, or are you saying that because you genuinely feel like the job is not done yet? It was along those lines, and he just said that they're going to stay the course. He kind of avoided the question. So I came into today knowing that he wouldn't want to send the market way higher, but I feel like he ended up doing that a little bit anyways. But y'all can let me know what you think. I'll leave it here for today. I appreciate everyone listening and watching this episode. Please subscribe on YouTube and follow wherever you listen to podcasts. And I will see you tomorrow after a plethora of big earnings.